Hi, Harry here for the rant on July 26th. Now, everybody knows I've been looking for a topping process here in what has never even remotely occurred in history, the largest, longest, and 100% or even 120% artificial bubble in history and occurs. I'm not the only one calling it, but it's an everything bubble. Real estate, even commodities, even gold has bubbled up most time in history, stocks, everything, okay? So this is a big deal, and anybody who studied history, especially me in great depth, will tell you bubbles are rare and they only end one way. They burst, and they burst horribly. Now, maybe governments can manage this a little more, but every major bubble in history has burst, 90-some%, and in a relatively short period of time compared to how long it took to build. So what I'm finally seeing here in this second giant artificial bubble is a progression of tops that's forming. What I like about when I see a progression of tops is that it means you're at a major top and not just another top on the way up. When you see different things leading and the crash on the way down. And of course, you know that one of the leading sectors today is obviously cryptocurrency, still in its early stages. And of course, it has bubbled the most. And what I also love about it, it's led. I mean, most of the value is just in Bitcoin and Ethereum, a few coins out of the potential 40,000 out there. And Bitcoin has peaked the first in this recent progression that does seem like it's forming a major long-term top. So again, March 13th, Bitcoin hit a high of around 73,750 and dropped 24.3% to a recent low of 55,849. Now, it has had a significant bounce, more than other indices and stuff and stocks and all, back up to 68,092 recently, and I think that could be about a month. But that's a 22% bounce, okay? And that's 60%, more than 60% retrace. So I wouldn't expect a lot more, but Bitcoin is getting back closer to those 73,750 highs here recently, okay? But again, if you've been in Bitcoin and you're like, when do I get out? If you haven't already, well, this is probably a really good time. Then, of course, I look in stocks. I focus more on the NASDAQ because it's a little sexier, tech-oriented. And of course, what bubbles in bubble periods is the technology type of stocks that tend to lead and create bubbles. And real quickly, just to step back, up until this period in my history of forecasting, going back to the early to mid 80s when I developed the spending wave and a lot of my new indicators, it was enough just to have the spending wave, the peak in spending for generations. That was the biggest thing that the stock market correlated in all the way back, the roaring 20s boom and great bust, and the 50s and 60s boom, and then long inflationary recession and bust, and then now the great boom ahead. But what did happen, as we all know, is that when we got the major 2008 crash and downturn and recession, or really what looked like the early stage of depression that I've been forecasting all the way back to the early to mid 80s, governments decided to step in and intervene on a level never seen in history and globally and everything else. And now we have this second artificial bubble. So what I'm seeing now, Bitcoin, again, March 13th, has recently peaked about 73,750, taken the biggest correction so far, and since it's the leader, that's significant. But now the bounce has gotten enough that I couldn't rule out Bitcoin making new high, but I'd still say I think we probably saw the high in March. Well, the NASDAQ has followed, and stocks have followed Bitcoin, and the NASDAQ has gone up to a new high, 18,647 on July 10th, just recently, okay? And it has crashed 8.7% at the worst, down to 17,034, and it's had about a 3% bounce since, okay? Now, that 22% bounce in Bitcoin is more convincing. A 3% bounce in NASDAQ looks very, very weak, okay? So obviously we could bounce more here, no question about it, but this weak bounce makes me even more cautious here. The S&P 500, similarly, peaked a little later, July 16th, went down 4.9% and has had only a 2% bounce. So again, progression of tops, mid-March, and then here in mid-July, first the NASDAQ and then the S&P follow. The riskiest stuff peaks first, and the safer, like the S&P 500, peaks last. And of course, we have to see if this correction follows through. But at this point, it looks like it is. So for people who have not sold out, and I know most of our subscribers have sold out mostly or totally a long time ago, because we've been warning about this. But if you've still been holding out, this bounce here we're in right now, especially in Bitcoin, is probably a very good final place to sell out and at least give a chance to see if this first wave down, remember all progressions in Elliott wave, major progressions like are 1, 2, 3, 4, 5, 3 booms and 2 corrections in between on the major direction. So if we're in a bull market, those patterns work out going up, but now we're in a bear market, at least by my best calculation. So we have seen 5 waves down in the Bitcoin and stocks, and now we're seeing a bounce. And so we're following this bounce, and we're looking for basically the biggest sign to say that this correction is continuing and it's going to get more serious and turn into a major crash is if Bitcoin breaks below 55,000, a little more than its recent low at 55,859. If it can break decisively below 55,000, because Bitcoin's top is the most unique, instead of just like a first normal crash, it's been going down in a modestly declining channel, sideways channel. So lower highs and lower lows. And that's why a new low below 55,849 and particularly below 55,000 at the bottom of that little channel would be the final signal to say, okay, folks, if you haven't worried about this crash now, or if you're not out all the way, this is a good time. I suggest selling on this bounce. Crypto, stocks, and real estate, I've told you many times, real estate is the last to peak typically and the slowest to come down at first, but it freezes up and gets illiquid the worst. I can always sell my Bitcoin, always sell any stocks or indices, but when real estate starts looking questionable, it can be hard to sell at any reasonable price. And that's why I say this is really last chance to sell any real estate you don't plan on living on or owning for the rest of your life. And even that, if you're not overly attached to your house, this will be, now it looks like, again, in housing and real estate, I'm only talking about going back to the last major lows in mid-2012. Well, that's now 62%. I used to be forecasting 50 in an average house. So imagine the upscale house, okay? So again, serious crash possible. This is the time to get serious about it. And I think this bounce is the last good time to sell anything you're planning on selling, real estate, stocks, crypto, anything, and even gold, even though gold will probably hold up the last here. But you got to remember, even in 2008, after holding up well into mid-2008, gold finally crashed 40-some%. And that wasn't as much as everything else, but it still crashed in the last half of 2008 when that was at the worst. So even gold is something to consider. Only the treasury bonds, which I know most people are in, TLT, TMF 3X. And again, one of the reasons I say, hey, now, if you want to short, why do SQQQ, which is 3 times short instead of PSQ? Because you can get your targeted, whether you want to be 50% short or 80 or 100, you can get that with less money and leave a pile of cash. In uncertain times and volatile times, I love having just cash that's easy to jump on an opportunity. Say if your neighbor's house or somebody down the street just go into foreclosure and it's just a bargain of a lifetime, then you could step into that and lock that up if you have the cash to do that, and still be short the stock market 3x with a smaller amount of money on SQQQ, or still be long the treasury bonds on TMF 3 times instead of TLT 1 time. So again, you can look at all of that, talk to your financial advisor or whoever you buddy up with. But again, it does look like that we are finally making what looks like a credible top. And again, no more perverted market ever in history. This is hard. Everything about this is harder to forecast than anything I've seen in my entire career. But this is finally looking like a credible top and a good time to get serious about just being out in cash. And there's nothing wrong with sitting in cash until things become more clear. But this is also, if you want to get short or more short than you are now and finally sell, this I think is a very good time on this bounce, which is not likely, I think, to last long. So of course I'll keep you updated. This is the time to look for updates.